Can you see my screen?
No. Yes. Right now I'm seeing it. Yeah.
You are seeing charts, right?
Yeah.
Okay. Okay, let me turn off my camera then. Restart. Okay, so what should we do today? Wait. Oh, I want us to consider breaker blocks. Breaker blocks and then fair value gap. Two things, because I'm outside, I don't want to spend much time, but we actually have to do something. Abi, you can hear me? You can hear me, right?
Yeah.
Okay.
Yeah.
So, breaker block. And fair, let me label it well. One is breaker block. Two is fair value gap. And maybe let me add three. The last time we did break of structure and change of character, right?
Yes.
Okay.
Yeah.
And inducement. Okay. So these three things. So breaker block BB. If we say breaker block, is simply a field order block. A field order block is breaker block. So a field order block is breaker block. Let's go back to the gold trade. The last time we were discussing yeah, where is it? Yes, this is gold. You see, I was teaching you something here the last time. Let me go to the 1 hour. That here price was supposed to respect this order block here. You get it?
Yeah.
And sell. You remember, right?
Yeah.
Yeah. Then it failed. So this breaker block is still valid so long as it hasn't been retested. So if let's say this breaker block was pushed up and later on came back to retest it and jump up, that one would have been retested breaker block. But right now it just jumped away and never came back, so still it was valid. Let's look at here. And I was actually anticipating that price will come and then respect it. Lo and behold, this breaker block has been respected and it went to this supply zone. It came to this supply zone. So that means I'm not teaching you something which does not work. It really works because it is actually occurring on the chart. So breaker blocks are field order block. So a classical example is what I have identified for you here. So this one has actually played out. And let's identify another breaker block. A field order block is a breaker block. A field order block is a breaker block. You see, we have a break of structure to this low, and its high was here. Let me go to the 30 minutes or 40 minutes. 30 minutes to check something. This is the high of this swing, and under normal circumstance, price was supposed to respect here and then bounce off to the top. bounce to the top, bounce to the downside, sell off. But here lies the case, it has been broken, and this pullback is incomplete. It was supposed to come and tap in, then buy. So this is also a pending order, that if price, whenever price come back, you'll be looking forward to buy from this breaker block. You'll be looking forward to buy from the breaker block. Where is it? Oh shit. You'll be looking forward to take a buy here. So a field order block is called breaker block. Let me zoom out so that it becomes clear. Yeah, so a field order block is called breaker block. So this one, we are anticipating for a trade on this breaker block, and it's same applies to sell market. This is a buy market. A buy market, breaker blocks are for continuation, and other blocks, I said it's for what? The last time I said other blocks are for what?
Either bullish or bearish.
It could be bullish or bearish candlestick, but breaker blocks are for continuation, and then other blocks are for reversals.
What?
Breaker blocks are for continuation of trades, and other blocks are for reversals. It's very simple. So in the near future, I will be expecting the price will react to this area, and I will take a buy on that. And what which side? Here we have a breaker block, also a break of structure to the downside. Price was supposed to respect. Oh, okay, this one, it has been respected, so it is invalid. This other block here was supposed to send price down, but here lies the case, it has been broken, and it has come back to retest it and jump up. So if it hasn't been respected, then we would have been waiting for a confirmation or a trade on this breaker block, but right now it has been respected, so no need. This guy, what's wrong with him? So that is invalid breaker block. So that is the definition of breaker block. Let's go back to what we the next thing. I would be very fast. Which pair was I using? I don't want to waste time. Let me. I'm not seeing where I made the notes. Let's do it on gold chart. Let me type it real quick. Breaker block to fair value gap, 3 inducement. So we are done with breaker block. I said it's a field order block. Field order block, and fair value gap, FVG. That one is the space left in between
Your screen has gone. I'm not seeing it.
Is that
Your screen is not being displayed.
really? It has stopped sharing.
Yeah.
So what are you currently seeing?
I'm seeing just your profile. Human is presenting.
It can be your network. Check now.
Yes.
Okay. So FVG is the space left in between candlestick. Candlestick. It could be, you need 3 candlesticks to actually identify fair value gap.
Which candlestick do you need them?
Three candlesticks. 3 candlesticks before you can actually identify a fair value gap or imbalance. So I'm making everything simple and short so that you would easily understand. So example is, if you have 1 candlestick here and another one here and one on top here, it will be that between the lower candlestick and the next candlestick that will form at the top, let me mark it, at the next candlestick that will form here, the space that will be left in between will be your fair value gap, because this candlestick was to fill everything, should hit the head of the other candlestick. So if it fails, it has created a gap. That is a fair value gap or imbalance. So price will always come and mitigate those space. So that is a fair value gap. Let's try and identify fair value gaps. Is that?
You'll say 3 candlesticks, right?
Yes, 3 candlesticks. And the next candlestick will be the one to actually, how do I say it?
The one to say it's a fair value gap,
confirm, right? The one to confirm a fair value gap. So, so there is a fair value gap between the candlestick here and this candlestick. This is imbalance, full imbalance. This is full imbalance. So whenever you find imbalance, look for the next candlestick as your order block. And that next candlestick should be a swing low candlestick. So this is how to identify an imbalance. This is an imbalance. So when I'm done, we will use all this that we are learning to form a strategy. So you see, price came back to tap in the imbalance and bought. But me, I don't use imbalance as my point of interest or as my entry point. I use it as a confirmation for my order block. So this is a fair value gap.
Your screen again is going.
It might be from your network, because it's still showing. Let me stop sharing and share again.
Yeah.
Is it back?
Yes. Yeah, it's back.
Okay, let's do things fast. And at times the markets create gaps, so those gaps are also imbalance. So this imbalance needs to be filled. And at this imbalance, is there any candlestick before the imbalance? So this is a candlestick, then it's my order block, my point of interest. So whenever price comes here, I'll be looking forward to take a sell. So that is an imbalance or fair value gap. Let's move on to inducement. I'm sure you are taking notes.
Yes, I'm taking notes.
ID. That is how I represent my inducement. I always write ID, meaning inducement, or it's a must for me to identify it. That's identification of inducement. So I represent it with ID. So inducement is first. It's always the first. It's always the first pullback after a break of structure or a change of character. Change of character. The first pullback after a break of structure or a change of character. We have forms of inducement. We have liquidity inducement and engineering inducement, but this one is a perfect. This trade is a perfect example of liquidity inducement, or we have what we call structural inducement, but the kinds are not really necessary. If you can actually identify it, it's the names or the types are not really necessary. If you can identify, this is a break of structure. This one is called structural inducement. The break of structure, the first pullback that caused the break of structure, the swing high that caused the break of structure. This is a perfect structure for it. A swing high or a lower high, and that the second swing high that caused the break of the structure is always your inducement. If you forget to identify it, you will hit a stop loss. You see, I shared a trade in a Telegram group where I was taking the entry from here. I don't know if you saw it, but later on I realized I have to actually identify my inducement. Then I changed the setup, but before I had already given the trade, so I couldn't do anything about it. So I changed it and took my entry here. So this is a structural inducement or liquidity inducement. So you identify it and then you target the next low. So that's why I took this trade. So, and to talk of the first pullback of a break of structure or a change of character, this is a perfect example of that one. We have what we called, the network is lagging. Okay, we have a break of structure here, a market structure shift or a change of character. The first pullback was this one, is the inducement here, and the inducement always have to be 50% retracement whenever you measure the swing using Fibonacci, the swing high to the swing low. Here it disqualified, but taking the swing low, it is actually the inducement for the swing high for this breakout block here. Please, are you following? Hello? We do it fast so we end up with the class. Where I was talking about inducement, right? Yeah. So before you ended, I was saying that inducement is always the first pullback after a break of structure or a change of character, and at times it can be the last swing high, or let me say the first swing high after a break of structure or a change of character. So in another words, let me say, or the first swing high after a break of structure or a change of character. So the second definition is this one, the first swing high after a break of structure or a change of character. This is the first definition. The break of structure, this was the swing high that caused the break of structure, so it is the inducement. So if you mark it, the next swing high will be your point of interest, and will be your inducement. That is why we had this sell. And you get it?
Yes.
Okay. Please keep it. Don't forget it. Inducement is always the first pullback after a break of structure or a change of character. Or this is another form of inducement. This is two forms of inducement I'm giving you. Or the first swing high after a break of structure or a change of character. The first swing high. So that is it. The first definition is this one: a break of structure, a change of character. Then we have the first pullback here being our inducement, and it should always be a 50% retracement, measuring the swing high, or 50% or more. It shouldn't be below. So this we have here, a breaker block took this sell, and then it came back to break this low. So, and for this one here, this sell, you would have gotten this trade also. This is order block, and this happened to be the first pullback after the change of character, and came back to respect it here, and we had a sell down. If you can only obey this or sit on your hands whenever you see this, then you take a trade. I'm sure, I'm 100% certain that you'll be profitable.
So you identify an order block, change of character.
Yes. First pullback.
Then
the first
yes,
pullback.
First pullback.
Yes. So the inducement is it is having two definitions. It's always the first pullback after a break of structure or a change of character. When you identify the inducement, the next thing you have to identify is your order block. Then this definition is for this setup. It's for this setup. A break of structure, a change of character, first pullback. You mark this. Let me clear this here. First pullback was this one. Even if I go to the 30 minutes, you see that the order block it gave us wasn't. The first one didn't mitigate it. Price has to come back again to tap into the order block and clear the inducement it created here. Then sell. Okay, so that is the definition for the first one. And the second one here applies to this one. Applies to this trade. The first swing high is our inducement, and the next swing you identify your order block, then you sell. So not to waste much time, I think we are done with today's class, and I'm recording this. I'll forward it or post it on my YouTube. Then if anything, you go and make reference from the YouTube channel. Okay.
All right.
So have a nice day. How is it going? It's bullshit. 30,000. Shit. Do you trade breakthrough? Do you trade Bitcoin? You trade Bitcoin. Bitcoin is now about to sell. Have you seen that? Let me show you the chart.
I'm waiting for to cut the rates.
Yeah. Okay.
Other points as well.
Okay.
Anyway.
All right, bro. Have a good day. To see you. All right. So have a nice day. Bye bye.
Bye bye.
All right.